Thank you so much. It's really nice to be here discussing some new developments in this BFSI space with my panel, which is very interesting. So we have traditional banking, we have digital banking, and we have a crypto expert on the panel. So you get to know everything that's happening on this space. So just kicking it off, since we're talking about innovation, within your organizations, what's one standout innovation your company has implemented recently that reflects the future direction in the BFSI space? So John, why don't you start with that?
Yeah, thanks, Preeti. And thanks for having me here today. So I think I must say, when we talk about innovation today, right, it's all about AI. So for us, really, it's about how we now start looking at implementing AI. So for us, internally, we rolled out our own Julius AI, or J. It's an AI platform that allows us to build out new use cases, explore how we can use generative AI in different areas, and at the same time, enable a massive amount of efficiency for the organization. Of course, I will talk a little bit more about that around how we're actually executing and driving some of these initiatives from both from the back end, also on the front end perspective.
Thanks, John. So Shiv, I believe you would have started with AI, the Trust Bank would have started on that basis. But yeah, very interested to hear what are your thoughts.
Yeah, so AI is like bread and butter these days, right? So any discussion that starts, we start with how many people we need, but eventually we say that how soon can we automate and move on to the next thing, right? So if I look at last 1 year innovation, and because I am responsible for technology operations, one of the key thing in my mind is the BCP, or how do we do disaster recovery, right? In any of the banks, if you see, disaster recovery is a massive program. And every year we need to certify ourselves that our applications are ready, and in case of any issue, we'll be able to swing and all that. And the entire program takes at least 3 to 4 months. So last 12 months, we had aggressively worked on to reduce this time, and how do we do a quicker, more efficient, and less manual disaster recovery. So today, for example, we have a pipeline. In the night, I can just trigger that pipeline, go sleep. In the morning, when I wake up, more than 160 cases of resiliency testing are auto-tested, along with the data, along with the graphs, along with the turnaround time, and availability confirmation. So that's what AI brings. Such a powerful tool. What used to take us 1.5 to 2 months to demonstrate our disaster recovery capabilities has been reduced to like overnight, and no human thing. So there are still some manual things where we connect to third parties to demonstrate that, but it's amazing what's happening. So we don't even wait for next 1 year to certify a cycle. It's just on a whim. Whenever I want, I can trigger that sleep. Or morning, I see the resiliency report. That's amazing what has happened.
Good to hear operational efficiency and resiliency coming with technology. So Hassan, a completely different landscape. How do you see innovation in your organization?
Yeah, so Coinbase is a global crypto platform and exchange. We're publicly listed on NASDAQ. We're a Fortune 500 company now. We are sort of in the thick of crypto and digital assets innovation. That's our core business. So we're very, very excited and optimistic about what's going on. In Singapore, we have our MPI license, which we acquired about 2 years ago, and are proudly operational to service Singaporean consumers and institutions. So we do try to dog food and eat our own products and everything that's going on. So at the corporate level, one small example is that we, in the last few years, we have almost completely re-architected our vendor payments program. Obviously, we have a lot of fiat payments that still go through, but we started offering the ability to pay out and accept sort of USDC for some of our vendors who are really kind of situated all around the world. And in particular, we have an operations center in the Philippines. We have a lot of vendors there. And what we found was that there's just a lot of stablecoin acceptance out in the Philippines. So today, almost all of our payments that go out to the Philippines are off of USDC. It's cut down just a ton of paperwork, a ton of settlement time. There's a lot of very strong kind of off ramps back into PHP in the Philippines, and so these vendors are very excited about the fact that they can just be on crypto rails with us.
Yeah, the banks should be scared. Just talking about cryptos and digital tokenization, I think just talking about tokenization and real world application of that. How is tokenization of real-world assets playing out across the industry? So you just mentioned a use case of it, but especially when we talk about stablecoins, which you just mentioned, and also blockchain, how are you seeing it? So Hassan, why don't you take this first?
Yeah, so taking a step back, looking at what's happening in the U.S. with the regulatory developments. So the Genius Act just was enshrined into law recently, and then the Clarity Act, which also provides further clarity on securities versus commodities. That should hopefully pass through soon. So these are watershed moments, not just for the industry, but for the technology as a whole, in terms of how it can really start to, overlap and integrate into mainstream finance. So that's something that's provided a lot of tailwinds for the industry. It's stuff that we've been working on for a long time. But what's more exciting than just sort of these crypto companies, moving forward is a lot of the tier one banks are now starting to jump in headfirst into this revolution. So we announced our partnership with JP Morgan recently. They're going to be issuing their tokenized deposits on Base, which is our blockchain, one with PNC Bank, another partnership with Shopify. So I think we're just seeing the floodgates sort of open at this point in terms of where this is headed. And then to the particular point around like tokenization, stablecoins is a form of tokenization. You're representing US dollars on blockchain. It's at around like 278 billion right now. Conservative estimates are this is headed towards 2 to 3 trillion in the next 5 to 6 years. So I think everyone sees that this opportunity is at a scale where it's interesting for mainstream financial services companies to come in as well. Beyond stablecoins, we're starting to see tokenization of private credit, of various kinds of commodities, but even the SEC in the US is very excited about bringing public equities, Reg NMS equities on chain. And that's something that we've been engaging with them on, and now they have a true open door policy of, hey, how do we actually revolutionize capital markets, and especially kind of out in the US, and how do we bring all of these benefits of blockchain, of like instant settlement, being able to interact and have composability with other kinds of DeFi primitives, whilst preserving the integrity and investor guardrails that the US capital markets enjoy.
Very interesting. So Jonathan, what is your view? I know you mentioned you dabbled into tokenization of art, which was very, very interesting. How do you see it?
Well, I mean, we're a traditional wealth manager, right? And one of the things, and we bank for the ultra wealthy, they have a huge amount of physical assets. So one of the things that we've been looking at also, or rather tried out, is trying to figure out how we can use tokenization as a means for us on real world assets. And one of the things that we did, I think over a year ago, was figure out how we can do this for artwork, for example. You have a physical painting, how could I potentially tokenize this painting and maybe even generate some form of monetary reward out of that? So the way that we looked at it was we started off by saying, look, how do we do this? Okay, let's try it out as an experiment. We set up a company. We bought a piece of artwork. We tokenized that artwork on the Polygon network. I think this was a while back. We sold all the tokens internally across the organization. And from there, what we did was we then donated everything to charity. We burned those tokens, and now I have a piece of artwork that I'm trying to figure out ownership around who actually owns that. So technically, you come to my office, if you pull that out, if you hold it physically, you probably own it because we burned those tokens. Now, the idea behind it is really about how we learn and test and how we validate, because we're trying to figure out, like, the world has changed significantly, right? And with blockchain now as a means to be able to allow us to do distributed conversations as well, right? So even exploring in the area of how do we use blockchain as a technology stack to allow us to look at even distributed AI, right? Distributed AI in the sense of having different AI systems communicate with each other without even sharing data. I think these are the ways that we're looking at it quite significantly in terms of how do we secure our data and how do we use these technologies to be able to allow us to provide new services and propositions for clients, while at the same time also be able to enable us to find new ways that we can operate.
Very interesting. Just shifting gears a little bit, Shiv, talking about scalability and innovation in UX and customer service, how are you approaching these challenges of scaling innovation across business units, especially when it comes to UX and the customer journey? And I believe Trust Bank, that's your key.
Yeah, so when we started the journey, and we know that we have to go through an app proposition, right? So we would not have any branches. There won't be any website where people can log in. It's only pure app, right? So we started with a vision of customer first. And when we say customer first, we completely expect him to know nothing about banking, right? He wants to transact, can transact. So when customer comes into the app, he should not see or look at saying that, okay, there's a loans tab or there is a savings tab. So internally, banks can have multiple divisions, but from a customer experience perspective, it should be a single point of entry for him. And no matter which journey he goes through, it should be similar. So with that in vision, we started having a centralized experience team. Regardless of what functions or features we are enabling, it is the experience team, which is the common one, which will decide the behavior, the navigation, the buttons and everything. And on top of that, internally, those businesses and divisions, they open their features through APIs. So that makes us so much of compostable, so that the experience team can change or orchestrate whichever way they want. And entire architecture is again event-based, so that makes it much more easy to do as many permutation and combinations you want.
That's true scaling innovation. So every business unit is not running in their own journey. So centralizing does help. Hassan, John, what does true scalability look like for you in the BFSI context? Blockchain, open banking, or AI that we spoke. Hassan, probably you can go first.
Yeah, I mean, Coinbase is earlier in its journey than some of the sort of banks on stage today. We at the same time, like, we are very regulated. We hold licenses and registrations in 11 major jurisdictions, and so we have over time really figured out what is the right combination of compliance and technology and product DNA to be able to achieve scale. So today, we have over 100 million users, and we're the largest crypto asset custodian in the world. And that's really come through just a lot of, I think what you were saying about, like, testing, learning, iterating, and going through, especially because with digital assets, like, there's a lot of novel concepts that just sort of did not exist before. So at a custody level, the fact that, blockchain transactions are immutable and irreversible. So this is why, like, hacks can be very devastating in the industry, that because once it's gone, they're bare assets and they're gone. And so, we've worked extensively, invested a ton in just scaling out our custodial operation. It starts with a culture of compliance and security, thinking of everything as an attack vector, even sort of assuming that none of your employees can be fully trusted, and having kind of full controls like across the system. So having technology controls and operational security. So those are all things that we've sort of learned and developed in-house, and really have kind of gone through this journey of what does a scaled operation, especially in this industry, which is which has new building blocks, but it needs to integrate into, again, like mainstream finance over time, look like. So it's been a lot of fun. There's a lot of like new learnings that come out of it every day.
So regulatory, oversight is important also here. Jonathan.
So I think I'll switch gears a little bit and we talk about AI and about scaling AI. I think that's one of the biggest challenges that we see as financial institutions or large corporations. One of the things that we looked at, I think in 2023, when Gen AI boom started all, everyone was talking about what is the use case? What is the use case that you have? Now, one individual use case is not scalable. The idea behind it is now that we're looking at is how to, in 2025, is how do we now switch gears, right? Looking at how are we able to now scale capabilities. And we talk about it from not only the infrastructure standpoint, but first we're setting up the infrastructure, right? And then moving now into AI capabilities. For example, how to use AI for document extraction, classification, voice to text, video to text, or whatever, right? All the different kinds of capabilities that AI can bring. The idea that we're looking at today and the operating model that we use is that we want to be able to build out capabilities, singular AI capabilities, and enable through APIs, right, and connectivity and microservices for our teams to be able to now build on those use cases across the board. So in the past, we say one use case and we have to build one use case. Today, we say we build one capability and it enables 50, 100 different use cases at scale, much more effectively.
I think that's a takeaway for all of us. As traditional banks, we've always said use case to get the budgets in for technology. Probably it's a mindset change to say, look at the capability and then you can generate many use cases. Very interesting. So, coming back to this, both of you mentioned about regulatory importance and how you're establishing and innovating technology into BFSI. How you're managing this? So, the race towards innovation and managing regulatory compliance, how is that being managed, and the pace with the regulators? So Shiv, why don't you go ahead?
So the way we look at it is, regulators are very effective partners with us, right? And they are one guiding light. We see that just to check ourselves what we are doing, are we on the right path or not? And compared to, in this region, I can say, MAS is leagues ahead of it, right? I think 2018 they already came up with the, generative AI is what is the compliance around it, the FEAT principles they had come out with, and in last month I think they started with Pathfinder as another initiative. So it's quite comforting to know that we have a regulator who is very much in touch with how technology is changing, and it's changing very rapidly, to be very honest, right? But it's very heartening to know that we have regulators who are so closed and tied up with the technology. They know they want to enable us as well, and together with them, we want to make sure that customer is safe, taken care. So the first thing we did when we started using AI was to build a use case which will test and assess the future AI capabilities from a regulation perspective. So that was the first thing we did and baselined. So that keeps us safe.
Hassan, what's your view?
Yeah, I think for us, this is maybe old school thinking, but I think it's the right one, which is that if you want to build an enduring long-term franchise, especially in like financial services, you have to have long-term thinking around what compliance and trust looks like. It's maybe not a view that's been shared with other people in this industry, but I do think that the industry is also maturing, and I think the good actors are breaking away from maybe less kind of good actors in the past. That said, crypto is a little different in that there haven't been clear rules of the road, in many jurisdictions. I think we're fortunate in Singapore that actually, for at least 5 years, there's been a DPT licensing regime, under the PS Act. And it's great to see that the US is sort of finally catching up. But that has required a lot of collaboration and dialogue with regulators all around the world. So we're very heartened to see that, with MiCA in EU and the JFS's sort of, new stands in Japan and with Hong Kong sort of coming up as well, that I think we're starting to see regulatory harmonization of all of these frameworks as well. And it all sort of, endures on the same principles of, sound kind of AML, CFT programs, technology risk management, conflicts of interest management, and so on. And so, we've been building for this kind of a model for a long time. So we're excited to see that, and the joke is that the crypto industry has been begging to be regulated. And so it's exciting to see that actually these supervisory frameworks are now being operationalized all around the world.
Makes sense. Jonathan, what about you? And considering that you're multi-jurisdictional MNC bank, security of financial data and local regulations does affect your AI rollout.
I think definitely, right? And the reality behind it is that we put in place guardrails, and that's the main thing. As even in the experimentation space, we put in place guardrails that allow us to be able to operate efficiently and at the same time get the right outcomes that we're trying to drive for. Another thing that we've done by doing that, we set up our own sandboxes that allow us to test directly with users, right? And being able to understand how users are going to interact with the technology, the outcomes we're going to drive. The next point is really about being in collaboration with the regulators, with other banks as well. So we're always going to be putting our hands up to be part of things like MindForge, for example. We're co-leading one of the initiatives under MindForge, and being a part of that allows us to get a better understanding of where regulation is going. We want to be a part of the conversation, not just waiting to see what the rules are going to be, right? And I think that for us is going to be it's going to continue. Right, and we're doing this across the world, not just in Singapore, but also in Switzerland, in the UK as well, right? So what we're doing is we're just being a part of the conversation, and this allows us to be able to lead, in a sense, right? To be able to help define what those new rules and guardrails are going to be coming forward into the next 5 to 10 years.
Makes sense. So there's future readiness with all of you, and the advocacy with the regulators helps, meet your goals on innovation. I mean, we've talked about how the regulators are helping. What regulatory gaps are you seeing in your journey of innovation? And how would you like that to be evolved in the next 12 to 18 months? So, Jonathan, we'll start with you and then we'll go through the panel.
I think when we talk about this topic, one is the innovation happens at a much faster pace than regulation. So that's one of the challenges, right? And regulation has to try and keep up with it. Now, I think the way I would look at it is how do we shorten that gap between the innovations happening versus the regulation coming in, right? And I think even in AI, right, it took a while when Gen AI exploded in 23. It took a while before the EU AI Acts, and the FEED principles and all this are coming out. So it takes a little bit of time, right? And how do we shorten the gap? I think that's the main thing for us.
Shiv, what about you?
So before this, I was talking to Hassan and I was telling him, right? So as much as AI is productively helping us to shorten the time taken, number of people required, all that stuff, it's equally helping the other side as well, right? The scams related, which are driven by AI, are on the rise, right? So bringing up the feature of accountability and transparency is something which we are catching up, and like we have launched the shared responsibility framework, which was mandated by regulators last year, right? So it will help us to curb much more. And then there is a fine balance that we have to bring up between following the regulation and making sure we don't bring too much friction into the customer journey. So that's, I think, the area which we will look into next 1 year.
Hassan, what about you?
Yeah, I think just on the point of regulatory harmonization, I think we're excited to see some of these regulators also conferring amongst themselves and also recognizing some of the practical challenges of sunrising an industry and going through a transition period. One specific example of this is around travel rule implementation. So travel rule has been live in Singapore under PSA for a while, but even the US, like, it was announced or mentioned, but the kind of activation has been slower. And then there's just different thresholds for reporting, different types of reporting styles, and then you have this unique challenge of have some VASs that are fully regulated and some that are offshore, and they may not be subject to the same constraints. So I think those are the kinds of challenges that we're excited to just work with both the industry and the regulators to figure out what does a transition glide path look like. I think there's other topics that are top of mind around again, stablecoin regulations and having fit for purpose licensing frameworks like the single currency framework license in Singapore, but now there's one in Hong Kong, there's one in Dubai, and so on that we were talking about. But I think it's really important because stablecoins will pave the path for much more kind of core financial use cases than perhaps some other crypto assets. So I think that's something that we're paying a lot of attention for the next 12 months.
Very interesting. So we've gone through a range of topics. We've talked about AI, we've talked about blockchain, we've talked about stablecoin regulations. So just a quick rapid fire to all of you. And in one sentence, if you could say which one innovation or tech trend you believe will define BFSI in the next 12 months. And Hassan, I'll start with you.
Well, I'm just going to play for my team and call it digital assets is still going to be the transformative way for financial services.
For me, it will be AI, because AI, I'm very, very sure that it will severely cut down the time to market. Once you have an idea, to materialize it and bring it to the customers would be like a snap. So that will work. And I think next 1 year would be something related to hyper-personalization maybe, or gamifying the entire journey for the customer. That is something. And then, saving our customers from AI-driven frauds, that would be top on our agenda.
John?
I would say it would be an embedded AI for me. Embedded AI meaning that having AI embedded into systems, things that you just see the outcome. And I think that's where, from my perspective, the next 12 months, we're going to see organizations, we're going to see banks, we're going to see everyone putting, how do we make your system smart, right? And be able to deliver the outcomes that you expect to see.
Great. So AI definitely seems to be the hot topic, and stable coins. So I think we should meet 12 months later and see if all these predictions are right or not. I open it up to all of you. If you have questions from our panel, please raise your hands and ask them.
Yes, if you have any questions, I'll go around. Please state your name, company, and your question.
Hi, I'm Manoj from Clifford Capital. I have a question to, I think, Shivan and Jonathan both. Since they are both in AI, and we are about to start our journey as well, how do you verify safety of AI? You mentioned your first use case, Shivanand, was AI verify kind of model that you built. Can you share a bit more details on how do you maintain, what do you check, how do you ensure the AI is safe for the organization?
Okay, you want to go first or me? Okay. Thanks for the question. So, as I said, right, when regulators started way back in 2018, when we were still, warming our feet whether we'll go or not. So the first principle that they introduced was FEAT, which is fair, ethical, accountable, and transparent, which meant that there cannot be any bias seeping in, there cannot be a hallucination, and personal identification should not happen. Right, so when we started the AI journey, the first thing what we did was, what are the two things that we're gonna use when we are trying to do the analytics or helping customer make the best choice? So one was the logs that we are generating from that log. So to begin with, the logs itself we have encrypted, we have identified the set of data that should not be shared across. So it was suppressed in the logs itself to begin with. So the shift left was taken care. So even if AI would congest those logs and use, it will not be able to identify a person individually. So that was taken care. Right? And second part was when it was using data sets, because we started as a cloud native. So we ensured that the data which are critical, those data elements are encrypted. So there will not be any situation where using any of the AI for analytics, it will be able to point out who that customer is. So that was our principle where we started from. And then, of course, in the last 1 year, we have increased the complexity of the thing, but the baseline still stands that whichever capability we are trying to use AI and materialize, it had to go through the initial AI program which will scan it, and it does a periodic scan to see the output that the capability gives is still following the FEAT principle. Does that answer? John, you would want to add something?
And maybe I share our experience on how we looked at it. I think realistically, we took a more human approach in terms of looking at it from an AI governance standpoint. We set up a responsible AI council, putting in place everything related to the EU AI Act. For us, I think that's a big one in terms of all and the responsible AI council is, before we bring any use case into production, it goes through the entire council, it goes through model risk management review to make sure we look at what kind of risk that we're taking, what's the outcomes of that we're going to see from the models, what's the level of hallucination. So we go through a lot of different testing, right, from that perspective, by putting together this AI governance, a rather maybe overly robust AI governance, but that's important for us to secure our client data as well as making sure that we're doing the right things and we're not letting AI go amok. But fundamentally, as I said, we took a very human-based approach that we have a human-in-the-loop requirement, is that the human that is using the AI tools or the AI use cases, they are responsible for the output that the AI comes out with. Right, so meaning that we don't send information directly to clients with AI-generated information. A human has to go through it. They has to be comfortable and be able to take responsibility for the outcomes.
Great. I believe there are no more questions. So thanks a lot. I think it was a very, very interesting panel, and it was really great to get the complete view of BFSI and just not restricted to banking. So thank you, everyone. Thanks to the panel.
Thank you, guys.
Round of applause for your wonderful moderator and panels.